fundsupermart.com.
We have seen a period of underperformance in the agriculture market. Can you explain why?
Basically, if you look at what's been happening in equity markets recently, there's been a focus on yield. The agribusiness sector has traditionally not been a high dividend paying sector, so it hasn't grabbed the attention of the investment community like yield focused stocks. The other factor which has been impacting sentiment on agribusiness has been the Northern Hemisphere has had a slow start to the planting season. We've had an elongated cold period in the Northern Hemisphere, and this has delayed planting of seed for wheat, corn and soy. So sentiment has been sort of focusing on that, and the issue that this could result in lower yields and higher grain prices. That's the reasons why the sector has underperformed in the recent period.
What are some of the drivers you think can turn this around?
Basically, what we've seen is quite a strong recovery in the planting season. So basically, the crops have been put into the ground. Commodity prices are fairly stable. The important thing for this sector is that the demographics are quite favourable for demand growth, and once this crop is harvested and we see the volume starting to come through the facilities, and we see the supply chain is full, demand is still quite strong. These factors will then start to improve sentiment for the sector.
With factors that affect food productions like changing climate, shortage of arable land, and inadequate logistics, how do you manage these risks present in this sector?
The way we've approached to manage these risks is basically having a diversified portfolio. We diversify the portfolio by geography and by different commodities. The Food and Agriculture Organisation has forecast that we need to spend approximately $80 billion per annum for the next 35 to 40 years to meet the growing food demand. This is the opportunity for the sector in the long term, because as the economics of the sector have improved, it's encouraging capital into the sector, and it needs to encourage capital into the sector to meet this forecast requirement to spend $80 billion per annum. And that $80 billion is not solely focused on bringing new land to productive capacity, because there's only a limited supply of that. But it's all about basically improving the yield on a per hectare basis, so using better seed, using more the appropriate nutrients, getting soil analysis done, and improving the logistics and infrastructure. So governments are sort of looking at, particularly Brazil, which is such an important agricultural market, at improving the infrastructure to get the product to market. So they're looking at railways, they're looking at building roads. Quite a slow process, but it is in the pipeline. The other thing we need to focus on is cold storage. So a lot of product goes to waste because it takes too long to get to market. So having the right logistics to bring the product to market is going to be an important variable for the future. So all this investment will create opportunities for an agribusiness sector. The agribusiness sector is quite small at the moment, but if you see the sort of investment that's required in the sector, I think this is going to lead to investment opportunities, and the sector is going to be much larger than it is today, tomorrow, because of this investment.
Can you elaborate on the approach you have taken in the fund stock selection?
Basically, we look for companies that have the ability to enhance the productive process or are adding to production. And we focus on companies that have a low cost of production, have quality assets, able to grow a management team in place to deliver on the growth, and a balance sheet that isn't constrained. Very simply, we think that volume is the key story in agribusiness, because we have positive demographics that are leading to increased consumption of food across the globe. So we want to sort of buy the companies that have the ability to deliver into that volume growth. Price is, you'll notice that basically the agriculture sector has a low correlation to the underlying commodity prices. They're much more sensitive to volume growth, because as you put more volume through high fixed cost facilities, you lower the unit cost, and that falls through as profit generation for these companies. So they have great operational leverage to volume, and that's what really the world needs, is more to increase our capability to produce more food in an environment where we have strong demand.
Why should investors consider an agribusiness fund?
I think investors should look at an agribusiness fund, and should really sort of look at it on a long-term basis. And the reasons that an investor should look at an agribusiness fund is the secular demand change that's happening in the sector. So as people living standards improve, and as the global population increases, we need to produce more food to meet that growing demand. And looking at agribusiness, and as I was mentioning before, the level of investment that's going to be required to deliver that increased food production means that the sector becomes quite a lot more larger than it is today, and more attractive than it is today, because the economics need to be there to allow capital of allocation into the sector.